As we leave 2024 behind, there's no doubt it was a transitional year, with a clear shift in the real estate market favoring buyers. But as rate cuts are expected to continue and entice more buyers to brave the market, does that mean 2025 will transition the other way? Well, it's complicated. First, borrowing costs continue to remain top of mind for home buyers in 2024, despite a steady pace of rate cuts, including 2 back-to-back whoppers. The fact remains that borrowing rates are still higher than they've been in years, which means we're still seeing buyers holding out for further rate cuts. And you can bet your bottom dollar that we will see that to continue in 2025. Nerves about high borrowing costs also explain why TRREB is reporting a slight dip in the average selling prices in 2024, with a decline of 1.6% compared to 2023. See, undesirable borrowing costs meant less competition for buyers, and fewer buyers meant inventory remained high. That created the perfect condition for buyers willing to risk high borrowing costs to take advantage of a marketplace that continued to keep widespread price growth at bay. A limited number of buyers held substantial negotiating power, which helped keep prices down. This was especially noticeable in unbeatable condo apartment prices, which you would have thought made it hard for people who qualified for a mortgage to resist. But resist they did. So we saw fewer people deciding to trade in tenant leases for mortgages, while selling prices remained low. Go figure. So with so many would-be first-time buyers choosing to bide their time waiting for 2025 interest rates relief, the market swing is not going to happen overnight. And while TRREB Chief Market Analyst Jason Mercer says buyers' hesitation impacted the less expensive condo segment, although low condo apartment sales do have an impact on overall housing prices, we have to remember that prices were all over the place. For example, when we look at semi-detached houses in the 416 area, those prices were up by 10.9% year over year, while townhouses were down by 18.2%. That's a pretty drastic when you compare the two. And while overall prices for condo apartments dropped, it was mostly in the 905 area where there was a decline of 1.4%, while 416 increased by 1.7%. So you need to work with a team who knows the market like us to help find an ideal area and housing and borrowing opportunities before housing prices gain momentum.